As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
What if gold or silver drop in price after I order it?
Well, everything fluctuates with time, but nothing has held up longer and better than gold and silver throughout all the changes that have happened in history. Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/RP. Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions. Welcome back, Reluctant Preppers. Today is Tuesday, July 23rd, 2019. We're very privileged to have a first-time visitor today. Warwick Smith is the CEO of USGD, American Pacific Mining Corp. He's an industry insider in the gold mining industry. He is here to answer questions that we have about the mining industry and about trends that may be affecting your financial future going ahead. Warwick, thank you very much for joining us this first time on Reluctant Preppers.
Yeah, much appreciated. Very happy to be here today, and thanks for having me.
We've been talking with several of our other guests about the deterioration in yield that is available to people through safe haven investments, safe haven with quotes, of such as bonds, including sovereign bonds, not only in the U.S. but all around the world. Because with the struggling economy over the past decade, central banks have been forced to lower and lower and lower interest rates to historically unprecedented levels for historically unprecedented lengths of time. And it's gotten so bad that right now we actually have over $13 trillion in sovereign debt that is actually in negative interest rates globally if you add it up between the different countries. And recently, Ray Dalio, one of the world's best ever fund managers, wrote in a piece saying that by the time that the central banks get through their next rate lowering period, it will have basically tarnished the reputation of bonds as a safe haven investment so much that the next time around people will have no other alternative than to consider gold, for example, as a primary destination when they need a flight to safety. Can you talk to us about what you think your view is of gold in the years ahead as a flight to safety?
Yeah, I mean, before I touch on the negative yielding bonds, gold is the one thing you can't print. You can always print more money, but you certainly can't print more gold, and that's always been one of my strongest beliefs as to why gold is the true safe haven. But here's the thing with negatively yielding bonds, and they're really only any good if their predictable decline is less than inflation. So if you've got a bond that's got a negative 1% yield and its inflation is 3 to 4%, then that may make some sense. But if gold returns you 30% or so on your investment in the next 15 to 18 months, it's not only a great investment, but it's a true non-paper storage of wealth. It's going to far exceed what any bond is going to get you with considerably more upside. That's for sure. And then the second part to the question, I believe, is sort of outlook on price of gold,
right?
Which I'm happy to kind of look into the crystal ball and give you my thoughts on, which are I'll caveat are complete speculation, but I do see gold breaking out of $1,700 or so within, let's call it like 15 to 18 months. And if that resistance is broken, a sustained gold price could see 1,900 to 2,000 within 24 to say 30 months. Now, if this happens, gold will have returned 30% at 1,700 and 54% at 2,000. If history repeats itself, then silver probably lags behind that a bit, and then gets the rise of 40 to 60% right behind it. I think silver right now is certainly underpriced, and worldwide silver production may see significant slowdowns prior to I think what are inevitable gold production slowdowns as well.
On your comments about changes coming ahead in gold or silver production, we've had several guests from the precious metals mining industry on before talking about the potential that we may truly be past peak production for past peak gold, and that can lead to past peak of other metals that are mined, such as silver and so on. There's a couple of reasons they've talked to us about that in the past, partly having because of richer, higher yielding deposits being already picked over, low-hanging fruit has already been found, that kind of thing. Other people have talked about just the costs of fuel, the cost of all this other stuff, just making it so much more difficult to turn a profit on gold. What's your view of, are we past peak gold production?
I've worked in the mining industry for a couple of decades now, and I've certainly seen mines that come and go. What ends up happening is you get these incremental laybacks for ounces that were not viable at lower gold prices that come back into economic plans as gold rises. Mm-hmm. And that'll keep production somewhat level for, let's say, 5 to 10 years. But it's the profitability of those ounces that obviously are not on par with the more quality ounces that are already there. So the IRR on those ounces, will bring profit margins down as production increases. As these laybacks are completed, gold production will begin to fall worldwide. I think possibly up to, call it 50% in the next 15 years, which is a heavy number. And any strong downturn in the gold price, although not something I would anticipate, but any strong downturn in the gold price will certainly accelerate that decline in production.
Another factor people have talked about with us in this regard is the industry's shift away, in order to make it through this tough decade, this 6-year plus, some say up to a decade trough that we've had in gold prices. In order to get through this and manage cash by reducing operational expenditures, that sort of thing, that many companies have had to cut back on exploration and on development in order to just operate mines, and so that the natural characteristic time constant of this industry, just the natural lead time means that even if they started supported by more robust gold market prices, even if they started a full-on trying to redevelop their discovery and exploration and development programs, that there would be this huge decade or whatever more lag before we'd see those things turn into full production. Is that another factor that's driving your prediction about lower gold production over the next decade?
Yeah, I think what you've just described is entirely accurate, and you're seeing that at certainly some of the larger companies. Here's what's been interesting over the course of the past, let's call it 12 months or so, is we've referred to it as sort of the rise of the mid-tiers. So you've got your Newmonts and your Barricks that are these senior companies, and then you have this mid-tier group that have production ounces that really to us are paving the way for the next bull run. And that is certainly the Oceana Golds, Fortuna Silvers, Hecla. These types of companies, and then below that you have junior companies, such as the company that I run, American Pacific, would be referred to as a junior company because we're brand new. And our stated goal is to develop these ounces with the helps of these mid tiers to eventually become one of these mid tiers, and that's something that we're driving and for the most part now succeeding in those steps forward. But to my point, what these mid-tiers are starting to do, and the successful ones in particular are doing aggressively over the past 12 months, is they're looking to the junior companies, the good ones, and making investments in them or investments in their projects to have them as their exploration arm. The seniors aren't doing it nearly as much, but these aggressive mid-tiers that are, in the case of like an Oceana Gold, they're producing 500,000 ounces now. They want to get to that 1 million ounce mark of production. They're growing. Their market cap is, doing exceedingly well from where they were a couple of years ago, and they're doing that by getting involved with smart junior companies who they believe in either their team or most importantly their asset, that it can be developed. So they're making those investments to bridge that gap of this, sort of decade of what we're looking at of production decline. They're investing in these smaller companies to get a foothold into them, if they think that there's the opportunity there through assets that can grow. So that to me has been probably one of the more interesting parts, and something that we've seen more and more over the past 12 months.
That's interesting. So that's like an acceleration strategy for restarting your pipeline rather than having to develop it in-house, is to quickly partner with those who are already able to act in a more agile manner. That's very fascinating.
Yeah, it's been an interesting strategy. You know, we've seen it a bit. We've done it. You know, I focused a bit while I was speaking there on Oceania Gold, because that's the team that we ended up teaming up on through with American Pacific, and we're thrilled with them as partners. But there are you know, Coeur d'Alene's doing it, Hecla's doing it. I know Fortuna Silver's done it successfully as well. There's a few of those really good, strong groups that, you know, they've got cash, they're in production, they're doing well, and they're using these juniors as essentially their exploration arm. Gives them the opportunity. They spend their money. Hey, okay, these guys are getting success. We like what they're doing. Here's an opportunity to invest to see that go forward. And then for the junior, Rick Rule's been big on this. He always says he likes to invest in junior companies that have, you know, a mid-tier or a major that's involved, because the mid-tier or the major has done the due diligence for you. Yeah. And I can say in the case of American Pacific, Oceania did a hell of a lot of due diligence. It was a great deal of work to get them to that decision point. But, you know, that's a good thing for your average investor. If you can see that one of these mid-tiers or majors has come in and put their money in, you can believe that they've done the work. That they understand the project, they understand the team, and they believe that it can be accelerated.
Before we get into talking a little bit more about that partnership, could you talk to us just for a minute, and this is back in zeroing in on gold itself, is what makes gold unique? I remember back to my high school physics class when they put up the periodic table of the elements, and we had to memorize many different things about them, electrons, shells, and all this other stuff. And one of the things was this, the potential voltage, that how readily the element was willing to give up electrons or take on electrons and therefore oxidize, and in that case, you know, like rust if it's iron, or oxidize if it's aluminum, that sort of thing. And gold was like not only completely unwilling to, it was like negative. So it's like if anything could force gold to get tarnish on it, it would like automatically untarnish, because it's so noble in that regards. When you've worked in the gold industry for these decades, and you've seen it come out of the ground, and you've touched it with your hand and everything, what is there for you that's unique about gold? You know,
like I said, I've been doing this for a long time, so there's probably a few different things that have really stuck with me along the way. First off, is it's the scarcity of it. You know, it truly is a rare metal on the earth. It's so labor intensive, and it is costly to extract. So scarcity is the first thing. The second really is, you know, tradition and history. It's hard to break 20,000 years worth of, you know, real worldwide generations and cultures who greatly value gold. You know, the perception of stability is probably a third thing. It's a storage of wealth. I think most of us would rather, you know, if you had $1,000, you'd rather have an ounce of gold in your hand than $1,000 bills, or I guess today $1,400 bills.
And it'll continue to increase over time, right?
Yeah, exactly. You have to keep stacking those bills up. You know, its acceptance as a worldwide currency is another. You know, and then I think the final point that I would make is, you know, instability and volatility in most worldwide currencies will continue. The thing with gold is gold will never be worth zero. You know, you're never going to look at that and say it has no value. So, you know, I think I've obviously listed off a few things there, but that's one of the ones that really sticks, is you're never going to have a zero value on gold.
So I understand that you're the co-founder of USGD, American Pacific Gold. If you could talk to us about why you got it started and who your co-founder is and why you two connected up.
Yeah, happy to do so. So American Pacific and Mining Corp went public in March of 2018. I'm teamed up with a gentleman by the name of Eric Saderholm. There's a very simple reason why I'm teamed up with him, and that's because I think he is the best. It's, you know, that's the honest take of it. He's a phenomenal geologist. He was the head of exploration in the Western U.S. for Newmont. So, you know, they entrusted him with going out and finding new assets for them that Newmont was going to purchase. So putting my faith in him was not a difficult thing to do. We had worked together previously. I like him. We get along incredibly well. He's sort of the yin to my yang, which is great. But he's, you know, there's sort of two types of geologists in the world. There are the ones that go out and make discoveries and continually make discoveries, and then there are the others. Eric is the former, not the latter. So I'm thrilled to be partnered with him. We picked up an incredibly high grade asset called Tuscarora, just outside of Elko, Nevada. We love Nevada for mining. It's a great place to do business. There's been, in the past 12 to 18 months, there's been quite a few takeovers of juniors and mid-tiers in Nevada. Hecla took over Klondex. Alio took over Rye Patch. I know there's a couple others. Northern Empire was taken over as well. So a phenomenal place to do business. And we were lucky enough to pick up what we view as a real first-class asset, high-grade, exciting asset. We were able to bring in a partner. We brought in Oceana Gold, who's spending $10 million US to earn 75% of the project. It's a project we paid $375,000 for 18 months ago, less than 18 months ago. Thrilled to have them. They're a $2.5 billion company. They're producing 500,000 ounces a year. Stated goal of getting to production of 1 million ounces. Fantastic partner for us. Very excited to drive the company ahead.
You mentioned that partnership.
Mm-hmm.
For a junior to partner with such a well-backed, $1 billion plus, in this case over $2.5 billion company, what are the benefits that it brings to you?
There's a lot. It's financial stability for the company first and foremost. They're spending their money to earn into a percentage, so it keeps our burn rate very low, which is great for a small or a company of our size, which is a smaller company today, that is growing as we speak. But also on top of that, we saw this a couple of weeks ago. We were with them. They're on ground, on site, doing work now. We sat in a room with 6 of their team, and everybody's got a different specialty. They've all worked their way up the ranks and work with these guys now. And, one guy's focused on the gravity, one guy's focused on the CSAMT, one guy's focused on the drilling, the other guy does the 3D modeling. As a small company, you would contract those guys out, to have the best of the best all in one room, looking at your project and getting excited about it. That tends to get you pretty excited. So, we're thrilled to be working with these guys. The final thing I would say that we like about them, they really cracked the code on an asset called Wahi, which is in New Zealand, and it's very similar to the asset that we have in Elko. It's a high grade underground epithermal system, and they came in and sort of did some a different slant and interesting type of exploration that really cracked the code for them there, and we're excited for them to use that with us, and that's one of the things that they're doing as we speak. So yeah, it's been so far so good. Just a fantastic experience so far.
Multiple guests on our show, from David Morgan to Alistair McLeod and others, have talked about the leverage effect that happens when people see the beginnings of a rising precious metals market and have the option of either sitting on the sidelines and watching another rally happen, or participating by acquiring physical metals directly, or also leveraging their participation by acquiring miners, especially junior miners. And Rick Rule mentioned the same thing when he was with us just last week. He was talking about how in a rising market, we'll see the miners outperforming the physical metal, sometimes by a multiple. So that kind of circles us way back to the beginning when we talked about what do you see ahead for gold and why. And you've talked to us about some of those things, like pressures on the production capacity, and there's going to be lagging demand potentially. What else do you see that you think will be factors driving the price action of gold in the next couple of years?
Certainly happy to touch on that. And, look, I think that in large part, that sort of starts with that you can print as much paper as you want, but you certainly can't print gold. And that's really a key factor. When world economies start to get unstable, when people start to get concerned, there is a real flight to safety, and gold certainly offers that to them. The other thing I'll touch on that you said and was about junior miners and their ability to rise significantly above the gold price as you get these gold bulls coming. I'll give you an example of that. Very early in my career, I worked for a company called Fortuna Silver. I did investor relations for them, and I was a small part of a large success. Their team there is fantastic, and they've done an amazing job building that company. But I was lucky enough to be there from when that was in its inception, and that was a $10 million market cap. I think it's just sub $1 billion market cap now. They've got 2 mines. I think the third. They either got 2 mines in production with a third on stream about to go into production, or the third one's in production. I can't recall. But they've done a phenomenal job. So from a $10 million market cap to just sub $1 billion market cap, listed on the New York Stock Exchange now, you can see how these companies can rise very quickly.
It's really quite interesting to hear it from someone who's walked the walk and been with the players that have done these things, and as you are still partnered with them today. What do you think else that people might need to know about your company if they're interested in considering becoming an owner of a gold mining company?
Look, I think one of the things that people should look for is, a good share structure. Our company's got 53 million shares out. Liquidity is important. It's great to be able to buy a stock, but if you do choose to sell it, you want to know that the liquidity is there as well. And that's one of the things that our company offers that a lot don't. Our average trading volume is around 500,000-600,000 shares a day. So it's easy to get a good sized position if you're interested, and you're also able to sell a position if you're interested as well. So I think that's important. You want to look for experienced management. I've been doing this for decades. My business partner, Eric, has been doing it for significantly longer, which means he's significantly older than me. I hope he watches this. But the rest of the team is excellent as well. Ken Cunningham has been a phenomenal director for us. He used to run Miranda Gold and did an incredible job with that company. And that was a company that went from around 20 cents to $2.50, and they raised tens of millions of dollars on the way up, and he did an exceptional job with them. So it's a team of guys who truly believe in the assets, truly believe in the space that we're in, and have been there and done it. I think those are the things that people should be looking for.
If people want to find out more about your specific company, what ticker symbol should they be aware of, and where can they find out more? Yeah,
absolutely. So the website is americanpacific.ca. The ticker symbol in Canada is USGD, and then down in the US it's USGDF. So that's where people can find out more info about us.
And your corporate website?
americanpacific.ca.
Got it. Warwick, it's been a pleasure having you here with us on Reluctant Preppers. Always enjoy having insiders in the industry to really tell us what's going on, because our tagline is helping you to be aware and prepared, and awareness starts with inside information. So thank you, Warwick, for joining us here this first time on Reluctant Preppers.
Yeah, thank you so much for having me. Really appreciate being on the show.
Hey, Reluctant Preppers. If you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Dunnigan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.